If your supply and demand zone keeps getting disrespected, then you might want to stick around to the end of this video because I'm going to be showing you how to spot true supply and demand zones for the best high probability setups. So let's get into the chart.
Okay guys, so first of all, if I get into showing you actual chart examples, I'll draw a rough sketch of what I'm trying to show you guys here. So now basically I'm a smart money trader, but whether it's smart money, supply and demand, it's basically the same thing. It's just different terminologies. So with that being said, let's get into the examples. So there is one thing the market always does, and this happens both during the London session and the New York session, but I'm going to be showing you for the New York session because I only trade the New York session. So basically we'll have price when price begins a trend. So let's take for example, price is going up and we now have price will do something like this. So we'll have some form of consolidation, and let's say price has gotten right here, price has gotten to a supply zone and it wants to react to go down, right? When we tap that supply zone, what's going to happen is price will create some form of liquidity up here and it sweeps and cleans out the liquidity, and it's also going to push down, clean out the liquidity created below, gathering momentum for the actual move. So now in most cases price is going to pull back a little bit and push lower. Now it has created two supply zones. So we have a supply zone right here and another supply zone right here. Now a lot of smart money traders will get caught up in supply zone right here. So this supply zone right here is basically to trap some smart money traders and take their stop loss, right? So what price is going to do is when it comes back, it's going to react at this point and it's going to give a little reaction right here, like price wants to continue down, and eventually it's going to push up to the first supply zone. And usually in this supply zone we have an order block right here. So that's why I said both supply and demand and smart money concepts, order blocks and all that, it's basically the same thing, just different terminologies. So when price gets up to this point, then we'll now have that move downwards. So this is for the sell scenario. So basically it's the same thing with the buys. Now let's say price is coming down, then it gets to a demand zone or an order block, basically a higher time frame order block or demand zone. What we'll have is price will consolidate a bit, and when they are ready to go up, price will clean out the liquidity below, also clean out the liquidity at the top. Then it's not going to make it to the supply zone, the demand zone right here. It's going to fall short and push lower again. This area is the fake supply zone. This zone, most cases, will get disrespected, and smart money traders will be trapped here, and also supply and demand traders will be trapped here. Those that will be buying from here, and price will come into this place, react, and actually start showing some signs like it wants to go up from here, and that also would trap in more traders thinking that price is actually starting to leave the building. So we'll have that reaction and price will eventually come and tap into the first zone and go up. So these are scenarios when it's a reversal. It also happens on a trending market. So let's say price is going up, price will just consolidate for a bit, and if price wants to continue that bullish trend, so take the liquidity below, take the ones above, then create another demand zone right here. But this is the true demand zone, so we'll have that brief reaction, tricking traders to get into the market some more before price will eventually come to the true zone and push high. So let's give you some examples. So we have one right here. So this example literally happened yesterday. So this was Friday. So all this price action was Friday's price action, and basically we can see it right here. So let's go to the daily time frame. This was a reversal trade. So looking right here, you can see this daily supply zone right here. We have this daily supply zone, and we also have a daily order block right here. So price came and tapped into that zone, tapped into the order block, the daily order block. Now drop down to the 15 minutes, looking for a reversal. And what do we have here? You can see right here what the price do. We had this break of structure right here. So when price broke this structure, price broke this structure. Now this is the initial start of that bearish move after the reaction at the order block / supply zone. Now all this area looks pretty mitigated. We have all this candle mitigating each other until this point, and we have this drop, and we have IPA, which is imperfect price action imbalance right here. And as price dropped, you can see price came back. This is now the supply zone, so let's mark that up. Right here is a new supply zone, and we also have another block right here. And what happened? We can see what I was explaining. Price dropped and came back, but fell short of reaching the supply zone and dropped again, now creating a second supply zone right here. And price eventually came and tapped into the first supply zone and dropped. And let's drop trade planner right here. So even if you choose to cover this whole extreme with your stop loss, and normally I pad my entries by 1 or 2 pips, you would have been triggered into this trade, and clearly goes for 1 to 3. So this works well with going for 1 to 3s. And you can see this is an example of supply zone, how to spot the true supply zone, which is this right here. Okay, so this is another example for reversal right here. So what do we have here? We have price was moving up, and then we had price push down. First of all, this move up had liquidity in here, which price took out. The price took out that liquidity, and also we had liquidity in this trend right here, trend line. Basically what price, this is an exact example of what I was showing with the diagram I drew. Price pushed, took the liquidity, pushed down, took this liquidity along this trend line, and price pulled back and did not make it quite to the supply zone. We mark that supply zone out right here. So price did not make its way to that supply zone and push down again, now creating a new supply zone right here. And as you can see, price came back, tapped into the new supply zone. Yeah. So price came in, tapped into the new supply zone, and started dropping as if that zone is going to hold, and eventually price pushed and tapped the true supply zone, which is the zone that actually began the downward movement. So it tapped into it. So let's drop the trade planner. Pad by 1 pip and drag this. You can see another 1 to 3 secured on this trade. So this happens everywhere, and you just have to train your eyes to spot this. So here's another example, and this is on the 5 minutes. So what do we have here? We have, this was the start of the day. So the London Open, and this was where that move started, that downward move started, and we had this push which broke structure. Now price, so to have this supply 5-minute supply zone right here, and what the price do? Price pulled back but didn't quite make it to that supply zone, and had some price messing around, and eventually this area which started that move down, which is the true supply zone, price, when the New York market opened, price came in and tapped to that zone, dropped. So right here, and it's powered by 1 pip. You can see, get your 1 to 3 risk to reward. Okay, so the final example, now this is for a buy situation, so a demand zone. So right here, the open of, this is the London Open right here, this had price push, break the structure, and actually in this situation price came back to the supply zone right here. So we have this supply zone right here, and price came back and made its way and mitigated that supply zone. So this area has already been, the orders in here has already been filled. Now we had another zone created when we had this move which broke structure again, and you can see price pulled back but did not make its way to the newly created supply zone here. So price pulled back, did not make its way to it, and pushed again, breaking structure, creating another supply zone, demand zone. So these are all demand zone. So when price pushed, and eventually when the New York session opened, price came back to the true supply zone and tapped into it and left. So this again, powered by 1 pip, and your 1 to 3 secured. So yeah, this is how to spot true supply and demand zones. And just, I'm telling you guys, this is very, very, very important. You can see right here, price also created liquidity here, also price created liquidity here, and when it dropped to mitigate the supply zone, it cleaned this liquidity. So you need to train your eyes to spot this, and this is going to help improve your win rate, so you are able to catch higher probability setups.
If you found value from this video, please like the video and don't forget to subscribe to the channel and turn on the notifications so you don't miss out when I drop new videos. So that's going to be all from me. Peace and love. Makins out.